Welcome back, everybody. I'm Jeff Barton. I'm your host here for the Mortgage Minute. We've been on the air for at least a year. We also do a radio show called the Jeff Barton, the Mortgage Voice. You can see that on YouTube. But we're on 5 radio stations in 3 different states and the Big 8 podcast. What we try to do is bring information about mortgages and real estate to you on a daily basis here on LinkedIn as well as Facebook. Lots going on, right? The political unrest, as well as what happened in the Capitol last week, had really little effect on the mortgage market, and it had little effect on the financial markets. We had some record-breaking news in the stock market and some of the other financial markets. In the mortgage market, what we did see was that the bond yield rather went up, and it has gone up again today. Now, that usually signals a rise in the mortgage rates, and that's exactly what happened. 30-year is at 2.88. The 15 is at 2.40. The FHA is at 2.25. That's pretty much unchanged. The jumbo is at 3.28, and the 5/1 ARM is at 2.38. The 10-year yield is at 1.1375. Now, we've seen that rise steadily since August of last year, 2019, roughly 5.5, 6 months ago. We started to see the bond yields rise. And conversely, we've seen interest rates just recently begin to take note of that. And so we have seen that rise as well. And I don't know really where it's headed, but we did get in some research. We looked at a couple of videos on Housing Wire. Great place to go and look for mortgage information if you wanted to do it. Housing Wire or Mortgage News Daily, both of these sites are pretty good. Housing Wire, guy named Princeton law professor, not Princeton law professor. He's a Princeton professor, is Nolan McCarty. He talked about a 2015 study, which is outside the parameters of what we are in now, but it still holds true. He talked a little bit about the fastest growth in inequality have tended to show the most political polarization. So as we see what's happening in Washington, and a lot of this is linked to the fact that a lot of people are out of jobs. This was very similar to what happened at the riots back in '68. It was a very hot summer that year. A lot of people were unemployed in the inner cities. Well, it's a lot like that now, where you still have 11 to 15 million people who are unemployed, and you have a lot of people who are hunkered down from COVID. It has led to this, inequality gap, leading to polarization and obviously the violence in the cities. And I think whatever the new administration does to try to bridge that gap or close the gap, i.e. bring more economic prosperity to those people who obviously feel disenfranchised, that's how we're going to solve any of these problems. Get people working, get people making money. They're less apt to take to the streets. That's always been a formula for capitalism and for us here in the United States, and I still think it holds true. There are many, many problems, and let's just list a few of them, right, that we have to deal with this year in the financial markets. The COVID, the vaccine rollout, the new president, the old president, the joblessness, the stimulus checks. This just names a few. I do think the stimulus will help, but we need more of it in order to maintain what we're doing currently, which is to try to tamp down the violence and get people back to work. Anyway, I'm Jeff Barton, your voice in the mortgage industry. I think we covered almost everything. Thanks very much, and we'll see you tomorrow.